Yesterday's report showed that leading economies on both sides of the Atlantic are recording a decline in the business activity. While the situation worsened sharply and unexpectedly in Europe, business activity looks slightly better than a forecast predicted in the United States. Nevertheless, Atlanta Fed President RAPHAEL BOSTIC drew attention to the fact that the progress in the fight against inflation and the cooling of the labor market appeared much faster. From his words, it's illogical to assume that the forecast of Wall Street analysts do not work out and that the Fed Reserve may be late with the monetary easing. Instead of small rate cuts, as the ECB and other major central banks do, the Fed Reserve slashed the funds rate by a half a percentage point. Considering that a jumbo rate cut happened just a few days ago, the economic data released this week do not yet take into account the change in monetary policy in the United States. Yesterday, investors got to know a drop in the US manufacturing PMI from 47.9 to 47 points. Analysts had projected a rise to 48 points. All in all, the situation was saved by a flexible service sector. The services PMI, instead of decreasing from 55.7 to 54, on the contrary, grew to 54.4 points. As a result, the composite PMI in the US dropped less than expected. Instead of the estimated 53 points, the index decreased only to 54.4, so the US dollar received some support. At the same time, shares of Wall Street closed the New York session with modest gains. The leading general market index S&P 500 intends to go up today, trading in an intraday corridor of 5,704 to 5,725 points. The US dollar index, which measures the value of the US currency against 6 major rivals, is trading today within an intraday corridor between 100.80 and 101.10. The index remains slightly above the one-year low of 100.21 recorded last week. As a result, the market may shift its focus to mass media reports. If no sensational news is released, most assets are likely to consolidate around the current levels. The prospects for the further policy easing by the US Central Bank and the strong US economy will further dent the US dollar strength against its major peers. This is what we are seeing today in the euro-dollar pair. After falling 0.5% yesterday in the light of weak economic reports, the European currency remains stable today, trading higher in the intraday corridor of 1.1106 to 1.1147. The breakout of the psychologically important support at 1.1100 may signal that the euro is losing its bullish momentum. Moreover, it might be gaining a bearish one. At the same time, the main currency pair is still in proximity to the local high of the uptrend. For further growth, buyers need to settle the price above 1.1200. In this case, the odds are that the euro-dollar pair might test the high set in July 2023 at 1.1276. Otherwise, the instrument is likely to hover around the current levels. In the meantime, the gold price isn't conquering new record highs. Amid escalating tensions in the Middle East, investors are injecting their funds into safe haven assets. The precious metal was trading within the range of $2,647 to $2,665 per ounce in the first half of Tuesday. The commodity market is trading in the green. For instance, Brent crude futures have jumped by almost 1% today. However, following an initial dip yesterday, crude oil closed with minor losses. It was mainly due to concerns about demand in the light of weak economic data from Europe. The Brent price slowed its bullish momentum near $75 per barrel and made a slight pullback. However, by the end of the trading day, the price rebounded to its original levels. Now, for the bulls to increase their long positions, they need to settle the price above $76. Otherwise, the range between 75 and 76 could act as resistance, potentially ending the upward cycle. Traders should keep in mind that the fundamental market situation remains unchanged. Something might shift after the US inventory data is released later today. Unfortunately, no official forecasts are available yet, but our analysts suggest that a further decline in inventories will be reported. And in this case, oil prices would receive an additional boost for further growth. A rather peculiar situation occurred again with the ruble. After the stock market had closed, the Russian ruble suddenly rallied sharply. However, this happened to be the incredibly low trading volumes. Similar events have occurred repeatedly over a few years. In such cases, the ruble's forex rate almost always returns to opening levels. At the present, there are no conditions for a notable shift in the balance of trading forces. The ruble could remain in this state for quite a while. Meanwhile, the Chinese yuan is celebrating an unprecedented victory today. The yuan has reached a 16-month peak following an announcement from the People's Bank of China. So, the regulator intends to implement unprecedented measures to support the economy. And these measures include in particular, lowering mortgage interest rates and ejecting at least 800 billion yuan to support China's aligned stock market. Additionally, the People's Bank of China lowered the required reserve ratio for banks and cut the key interest rates. Both interest rates were lowered on the same day for the first time in 10 years. Highlighting the urgency of stimulus measures. Although such measures are beyond all expectations, experts still voice their doubts. There is no guarantee that even such a large-scale support will be sufficient to pull China's economy out of the deflationary spiral and the property market crisis. So the yuan ruble pair today developed a strong rally and rose to the upper border of the range between 13.13 and 13.28. However, to reinforce long positions, buyers need to stabilize the price above last week's local high. Otherwise, the instrument is expected to fluctuate around the current levels. So that's all for today. We keep monitoring the financial markets situation. Subscribe to our channel and see you online tomorrow.